Hello, and welcome to the inaugural episode of PS Invest. I'm your host, Steve, and I'm here with my co host, Patrick. Over the next several weeks, months, and hopefully years, our goal is to teach you about the stock market and different ways to invest within it. We'll recap events that happened during the week, the impact they've had on the stock market, and how you can potentially take advantage through investments.
And just as a quick disclaimer, everything that we do discuss on this podcast is our opinion and not financial advice. It is meant for your entertainment only. If you would like to make any investments, you should always consult with a financial advisor. Any stocks that Steve or I own at the time of recording will be listed in the description of this video. We'll also mention anything that we're holding if we make a comment on it during the episode. Well, Steve, it's been quite a busy week. Yet another week of coronavirus in the news, and I think it's had a big impact on the earnings that we've seen this week, and we've seen a lot of big companies reporting earnings this week. I think the biggest standout was Tesla. So let's jump into their report a little bit. They were able to report $2.14 earnings per share versus an expected $1.72. Quite a big beat. This comes after reporting profits in the third quarter of last year, which were unexpected. And they're also able to beat on revenue, coming in just under $7.4 billion compared to the $7 billion expected. And it's been a big turning point now that Tesla is finally producing some revenue and positive cash flow. A lot, all of the analysts as well as Elon himself, that they expect Tesla to continue to be cash flow positive for the rest of the future, unless they go into bankruptcy, which at this point it doesn't seem like it's going to happen, at least anytime soon. They should be a profitable company. Their margins were down slightly, kind of, I'd say a small cause for concern, but overall it seems like they're really expanding and growing pretty well. And you got to keep in mind there's a lot of things at play right now when it comes to costs with, our trade war going on with China and different things like that. But they're looking to continue to grow. They want to build another plant in Europe. Specifically Germany by the end of 2021. And, not only their cars are making money, but $1 billion of their revenue, so almost a seventh of it, came from their solar energy products, as well as just merchandise and services they provide for their cars. And they expect their solar energy company portion of the company to grow about 50% this year. So it's not like they're just making cars. They're also providing other services and products that a lot of people don't even think about when they hear Tesla. Overall, I think this was a wonderful report for Tesla. What do you think? How do you think the market handled this report? And what are your opinions on Tesla's earnings?
Yeah, Tesla clearly blew their earnings out of the water, and I think the stock's reacting appropriately. I was reading something the other day that they've grown, at least the stock price has grown 150% over this past 6 months. That is insane. Yeah, and the fact that they're not just relying on their cars for profitability, they're getting it off of services and other types of merchandise. I think that's big. That shows that they're more diversified than just the auto industry. So I think the stock is having a good reaction right now. I think it's a little high. For like the prices. I think everything's priced accordingly, but looking to invest in this right now, I think you got to kind of let things settle down a little bit, see if you get a little bit of a pullback. But Tesla definitely a good company moving forward. Um, while we're on earnings, another company that had their earnings this week was Amazon,
Mm-hmm.
and they spiked like I think it was 20% or I don't know. They jumped after earnings. They hit the $1 trillion market cap again after their earnings. They were expecting an earning per share of $4.03. blew that out of the water with $6.47. Their revenue increased slightly, or their revenue came in slightly above what they were expecting at 87.4 billion as opposed to 86 billion. Um, they're up 21% quarter to quarter. Their web services have grown from 9.95 billion to 9.8 billion. So again, we're seeing some nice steady growth there. And normally their first quarter is historically one of their worst quarters, but they actually raised their guidance um, to 69 billion between 69 billion and 73 billion. The previous first quarter they were actually at 60 billion. So that's a nice jump there. They continue to invest in same day shipping, which is, people love getting their stuff on time, and that's what they think of with Amazon. And that leads to increased orders for them. So, I think the price reaction we saw is pretty, in accordance with what the earnings showed. What are your thoughts?
Yeah, I mean, I don't think people were really expecting Amazon to do as great as it did.
Hmm.
So I think maybe a slight overreaction, but I think a large positive reaction was definitely in the works for
Hmm.
Amazon as long as they were able to prove themselves. I know in the third quarter, I think they set aside 1.5 billion for that same day shipping initiative, and I think this quarter they're also spending an additional $1 billion. So they're definitely pouring a lot of money into it. And I think that's why a lot of people were hesitant, and Amazon kind of tailed off a little bit compared to some of the other big names at the end of the year. But I mean, these numbers clearly showed that whatever they saw in their research, to cause them to invest in this, it definitely paid off, and it paid off huge for them.
Hmm.
Congrats to them for joining the $1 trillion club again. So,
Huge.
yeah. I mean, speaking of the $1 trillion club, Microsoft also reported earnings this week. And,
Hmm.
similar to Amazon, they were, pretty good. They didn't see as much of a takeoff after the earnings. I think they only went up about 4% or so. But, on the earnings per share side of things, they reported $1.51 per share as opposed to $1.32 per share that was expected. That's a pretty nice surprise in my opinion. And in terms of revenue, they were just shy of 37 billion as opposed to 35.6 billion that was expected. So their income and earnings per share definitely seemed pretty nice for the previous quarter. Their fourth quarter revenue grew about 14% compared to the previous year's fourth quarter. So it definitely shows that their holiday season, they've definitely been ramping things up and improving. They have a lot of consumer products, but I know things like Azure um, have also been contributing to their growth. Now, Azure's growth did decline to 62% this quarter. Um, Compared to the previous year's fourth quarter, it was at 76%. But you can only grow at those kinds of numbers for so long, and even large companies like Goldman Sachs were projecting it only to grow about 58%. So even though it was a decrease, it's still beating what analysts were projecting, and everyone was anticipating the decrease.
Hmm.
But I mean, with Azure, they did win that huge Department of Defense contract for the JEDI project, the Joint Enterprise Defense Infrastructure project, and that's going to be worth $10 billion, and they're supposed to be paid that over a decade once they actually start working on it. Um, so I mean, overall, that they looked really good. They provided some really good numbers, a really good outlook. What do you think about Microsoft right here?
Yeah, I mean Microsoft, like you were saying, they're in the trillion dollar market value. Um, they've been on a tear as well over the past year. I think if they can continue to grow, at the rate that they are, just nice steady growth, I think, Microsoft, I think the earnings, I think the price reacted appropriately to the earnings. I think they're a company to definitely keep an eye on moving forward in a good way. Um, Another company, as we talk about the $1 trillion market value, that it's not quite knocking on the door yet, and they definitely took a hit after their earnings is Facebook. So Facebook announced earnings this past weekend. Initially, if you look at some of the numbers that they spit out, it looks like some solid earnings. Their earnings per share came in above expected. They actually had a $2.56 earning per share as opposed to the $2.53 that was expected. Their revenue grew a little, so they had a little over $21 billion as opposed to 20.8 billion dollars that was expected. Their daily active users increased from 1.66 billion to one, or increased from 1.65 billion to 1.66 billion. Um, their monthly active users is the same, which could go either way. It's at 2.5 billion. Average revenue per user was up to $8.52 versus $8.38. So you look at all this and you say that those are pretty solid numbers. They're growing. The thing that really took them down though was their expenses. Their expenses for the year were up 50%. Um, so, their operating margin dropped as well, from 45% to 34%. They still need to pay a $5 billion settlement, and due to the rising costs and expenses and smaller margins, the stock really took a dive due to earnings. Now, Facebook has been growing steadily over the year. I mean, I think this is a kind of a nice pullback. I mean, they had good numbers. They just kind of couldn't get out of their own way here. We'll see what happens moving forward with them. I think they can rebound. But what are your thoughts?
Yeah, I think initially after seeing the numbers and then seeing the price drop as much as it did, I was kind of surprised. But then
Hmm.
digging into it a little bit, seeing their huge increase in expenses and also that big margin drop. But then when you kind of compare it to, let's just say like the other stocks that we were just talking about, Tesla, Amazon, and Microsoft, when you look at like
Hmm.
how much they beat expectation by, you could see why people were so happy. So like even with like the good numbers Facebook provided, that they didn't really blow expectations away like a lot of the other stocks did. They kind of just hit their marks, or barely hit their marks in some regards. So I think that would have maybe given the stock a little bit of a push forward. But I think the big pullbacks of their expenses and their margins just completely canceled those out, and made people really sheepish with the stock. Um,
No, good points.
and I think privacy is still a big concern for a lot of people, but overall, I still really like Facebook, and I think
Hmm.
they're a really good company. They're going to be around for a while. They're really trying to, I think, develop and grow and kind of diversify their company. And I think they're going to continue to do that. I think they're going to continue to be profitable for a long time. So I think this might end up being a nice buying opportunity.
Hmm.
Um, another stock that we kind of saw get pulled back a little bit this week was Starbucks. And when you go through the numbers, it's definitely kind of a surprise, because they did beat the analyst projections. Their earnings per share came in at 79 cents, as opposed to 76 cents. The revenue kind of tied projections at 7.1 billion, but it is 7% growth from the last year, which is pretty nice. I think that's a nice number. But their
Hmm.
same store sales grew 5%, which is I think that's great. It shows that they can grow internally without expanding. So I think that's a nice number to look at. And that's up from 4.4% the previous year. So seeing that growing and staying positive is definitely a good sign.
Hmm.
And their margins also grew about 1% from 7.4 up to 18.2. Um, you know, they did give nice revenue guidance of about 6 to 8%. However, that didn't take into effect the coronavirus, and the coronavirus is what really drew this stock down, regardless of its good earnings. Now,
Hmm.
uh, Starbucks, as as far as their income is concerned, only about 10% of their sales come from China. So I mean, if you knock 10% off their guidance, you're still looking at like a solid, 5 to 7% growth. But I think the big concern here is you don't know, how fast Corona's going to spread, and if they're going to have to close more locations. So everywhere in China right now, where they have a lot of stores and there's a lot of coronavirus cases, they have closed all their stores. Um, and we don't know how long those are going to stay closed, and we don't know if they're going to have to close more in different countries. And I think that's what's really drawing the stock down. Now,
Hmm.
they're at highs of nearly $100, and now they're back down into the 80s. Um, I think based on these numbers and the reason why they're down being the coronavirus, I think this is a very nice buying opportunity for this stock. What do you think, Steve?
Hmm. Yeah, I would agree. I mean, Starbucks, I mean, I'm not a big coffee guy myself, but anytime I think of coffee, I think of Starbucks. They have a great brand, they have a great moat. You know, people think when people think of coffee, I would be willing to bet that most people think of Starbucks as well. And the coronavirus right now it is weighing on the market, especially some companies like Starbucks. I don't expect it. Once the coronavirus gets cleared up, I think Starbucks is definitely going to be able to bounce back. So yeah, I mean down off the highs of 100 down into the 80s. I think this is a great buying opportunity, like you were saying. Um, Another company that's kind of being a little bit affected by coronavirus, and they came out with earnings, is also Apple. Um, they actually reported really good earnings. They had their revenue increased, or their revenue came in above expectations at 91 billion opposed to 88 billion. They beat their earnings per share. They at about $5, and they were expected $4.55. Their quarter one guidance was in line with expectations. iPhone revenues are up about $4 billion. Their services revenue was down a little bit. Um, their gross margin was pretty much intact, in line with what they were expecting. Um, Other, just miscellaneous product revenues, those were up to $10 billion as opposed to the expected 9.5 billion. So they actually did jump on earnings. They had a nice little pop. But then they came down. Actually, yesterday they dropped back down to pre-earning prices due to the fact of coronavirus, and they had to shut down some shops and shut down corporate offices in China. And I think you saw the stock react to that news, and the way it should have. It's not the best news, um, but I do think that I don't know if right here is a great buying opportunity. It could be because you saw a drop off of the earning per share or off of the highs from earnings. But I would expect them to bounce back. Again, it all depends on how long the coronavirus is expected to last. But I think this is going to be a nice little pullback. But what are your thoughts?
Yeah, no, I definitely agree. I mean, the numbers looked really good. The only one that was kind of unexpected was their miss on their service revenue.
Hmm.
But over time, I think that's going to grow, especially seeing as their iPhone sales grew and all their other sales grew. So I think their services will grow as well. It's just going to take a little bit of time. Um, but yeah, I mean, seeing them decline here, maybe not the best buying point. But if they have another good quarter, I would expect them to pop yet again. I think it was just unfortunate timing for them. I don't think this is the
Hmm.
worst place in the world to buy a position. I would personally probably wait for it to go down a little bit more.
Hmm.
Maybe sub 300. I would look into adding a position. But if you're someone that thinks this bull market's going to continue to run, I think this might be a nice little buying opportunity for Apple. Um,
Hmm.
so I mean, we had a ton of big companies report this week. So it's going to be really exciting to see what happens next week as well, with coronavirus and a lot of other big companies reporting next week. I think some of the ones we'll want to touch on in next week's show are going to be Alphabet, the fourth trillion-dollar company. We already mentioned the other three that reported earnings this week. And then some of the other big companies we got reporting are going to be Disney, Snap, Twitter, Uber. It'll be interesting to see how they're going to report. They seem to be gaining a little bit of momentum. And then Chipotle, another big company out there, reporting next week. So it'll be interesting to see what goes on with them. All right, Steve. Well, we went through all these companies that have earnings, as well as these companies that are going to be reporting earnings next week. And, the big thing that impacted the companies that had good earnings but still went down was the coronavirus. So, what kind of new news and what exactly has been going on with the coronavirus lately?
So, this is like, I don't know, what, the second or third week that the coronavirus has been at least known about or spreading. Um, what we do know is it started in Wuhan, China, in a fish market. And after the first couple days, it really started to affect the market. This also came at a pretty bad time for China because they're actually celebrating the Lunar New Year, and that is actually one of the largest human migrations in the world. As you know, China has a billion people, a billion plus people, and they're all traveling around China celebrating the New Year. And so, with all this travel, that leads to more potential to actually spreading this virus even more. Wuhan has done its best to try to contain the virus. They've actually shut down all their train traffic and their air traffic. Other countries, such as the US, are starting to mull travel bans to China and actually are enforcing travel bans in some cases. And I think something that's really making people a little bit uneasy is we're starting to see the mortality rate accelerate a little bit. As of Thursday, the mortality rate, or there were over 200 deaths confirmed, and there were I think it was a little over 10,000 cases of coronavirus. Something to keep in mind is that most of these casualties have been occurring to people at risk, so older people or people that are very young, like babies or infants. But, it's something to keep in, it's just something to be aware of. It's definitely caught the attention of the World Health Organization. They actually declared a global emergency on Thursday. Um, so yeah, it's just something, make sure you wash your hands. Um, to, to, just you should always wash your hands just in general. But in terms of the coronavirus, and if you're worried about getting it, just uh, proper sanitation. But yeah,
Hmm.
so it's definitely something that's been affecting people and the market right now.
Yeah, definitely. And you mentioned how the World Health Organization declared the emergency on Thursday. I think it was sometime midday on Friday. The United States declared, the coronavirus a national health emergency,
Hmm.
which definitely played into that big downturn that we saw on Friday. Um, so I mean, we saw the S&P got hit real hard. Over the past couple of weeks, they've been kind of going up and down. Sinking low because of bad news, and then kind of building themselves back up. But after Friday, they sank back to uh, their beginning of the year prices. So we've definitely seen kind of a setback in the market. Um, some of the stocks getting hit really hard are things like travel, the casinos, a lot of the
Hmm.
cruise ships. We mentioned Starbucks and Apple getting affected by them. Some retail, And some of the big ones in the travel section are the airlines. American Airlines, Delta, and United. They're all starting to um, implement restricted travel to and from China.
Hmm.
And we saw a pretty good sell off on those stocks on Friday. American was down 3.2%, United Airlines down 4%, and Delta down 2.5%. So they're definitely feeling the pain from the coronavirus. And on top of that, I know they're already negatively impacted by Boeing causing them additional losses. So the airlines are definitely getting the worst of it, I think, here. But overall, I mean, I think the market does have some right to be nervous with the
Hmm.
unknown. Um, but I mean, how much longer do you think this can really go on? And before we see the market take a really big downturn. I don't know. How do you kind of see this playing out into the future, even if you have a couple different scenarios?
Well, that's the thing. I mean, I don't. I mean, every China and the U.S. and other countries are definitely taking measures to try and stop the spread. Um, there's only so much they can do though right now because I believe the incubation time for the virus is 4 to 5 days. So people could actually have the virus for, almost up to a week without showing symptoms, and they're just spreading it to people unknowingly. So I think I think it's still kind of early. It's only been about 3 weeks. I think it's still kind of early to really be able to tell how much longer this is going to last. But I will say, the longer that this does go on, the more pain that it is going to bring to the markets. The sooner that we can, contain the virus and start coming up with cures for it, uh, then you're going to start seeing the market bounce back. But I think right now, over the next couple weeks, probably even maybe up to a month, maybe a couple months, you're going to see a lot of volatility. I think there's going to be volatility. You're going to hear some good news. You're going to hear some bad news. Um, Really, it just depends on what on moving forward, what measures are taken. I do just want to bring up one more thing. You know, a, a lot of people are nervous about the coronavirus, but really something as they should be. And again, washing your hands, covering your mouth when you cough or sneeze. That's always a good way to stop preventing spread of any type of disease. But I will say, flu is actually more common and more deadly than the coronavirus at this point. So I'm not trying to knock coronavirus and say, don't take it serious, but I'm just trying to put it into a little bit of perspective. Um, the flu is something to just as much be cautious about, if not more. Um, so I don't know if that'll ease people's, perception of the coronavirus at all, but just something to keep in mind. But yeah, I don't know. What you have any other thoughts on that, or how do you see the market reacting?
Yeah, and I mean, just going off the whole flu thing. I mean, that's been a pretty big you know thing on the medical side
Hmm.
this year. I mean, the amount of cases that we've had has been substantial, and I believe the main time of the flu season is January through mid March. So I
Hmm.
mean that really hasn't even ramped up yet. So I could see something where if the coronavirus continues to spread as much as it has, and us ramping up into the major part of flu season, I could see that for being kind of a bad combination on the market. But I think we're still gonna have to wait and see how all this plays out. It's really hard to say because
Hmm.
you hear a lot of people saying the mortality is really low compared to other types of coronavirus like SARS and MERS. So
Hmm.
I mean it's definitely not as deadly as those, but I mean it is still deadly. It's still spreading very fast. It's hard to track. Um, like you said, tell who has it and when. Um, so I think until we do have some sort of vaccine for it, people are going to be scared. There's going to be a lot of volatility. Um,
Hmm.
but I mean, And anything that can cause volatility in this market, I think it's going to have a pretty big impact. And we've definitely seen that here in the past 2 weeks. I think you're just going to have to make smart investment choices and, just invest in stocks that are strong. Things like the companies that we touched on that reported earnings this week, things that are providing good uh, fundamental support, and continue and invest in those. I don't think this is a great time for speculation because anything like that, it's going to get hit hard in this type of
Hmm.
volatility.
Hmm.
All right, Steve. So wrapping up on the current events section, I kind of want to jump over to our group discussion portion of the show, where we take a small group of stocks. This week we're going to be focusing on fitness stocks, and we have a discussion about them. We talk about what's going on with them, both in the news and financially, and kind of just discuss where we see some opportunity.
Hmm.
So, like I mentioned, we want to touch on the fitness stocks, mostly athleisure wear, athletic wear, and really take a focus on Nike, Under Armour, and Lululemon. So, I think Nike, household name, very strong stock. Probably one of the first things you think of when you hear athleisure wear, athletic wear. Going to buy some new gym clothes or shoes or something like that. So let's start with them. What do they have going on right now, Steve? That's causing them to grow, innovate. Just kind of what's going on with stock in general.
Yeah, so I mean, Nike, very strong stock. Right now, there is a very strong demand for footwear. And like you were saying, when most people think of athletic wear or footwear, they think of Nike. Think Air Jordans, basketball shoes, just running shoes, football shoes, anything. Shoes, shoes, shoes. It's Nike. They've grown about 30% to date. At least the stock price has grown about 30% to date. And that includes a 15% jump from a dip back in early November. Their earnings growth has been much higher than predicted as well, so that's leading to the stock accelerating upward. They usually predict earnings growth in the mid-teens, and they've been exceeding that, which is very positive for the company. They've also been able to lower their marketing expenses due to innovation. So for instance, if they come out with a new type of basketball shoe, maybe they just change the color or they change a small part of the design, and that innovation has actually been a marketing value for them. So they've been able to decrease marketing just based on innovation. Um, Revenue has nearly tripled with the introduction of new products, so that in itself is cause for acceleration of the stock. Another big thing this year specifically is the 2020 Summer Olympics, and Nike's going to be all over that. So you'll probably see some marketing costs jump around that time, but that's to be expected. I mean, it's a once every 2 years. Summer Olympics is once every 4 years. Um, and rightfully so. You'll see some marketing increases from Nike, but very
Mm-hmm.
strong stock continues to grow. What are your thoughts? So you have you have some numbers, or what's your take on the stock?
Yeah, no, I think the stock looks pretty good. You mentioned its earnings growth. I know that their financial year is kind of strange. They go from May to May, so we're kind of
Hmm.
coming up to what they would consider their fiscal year of 2020. So
Hmm.
looking from their year going 2017 to 18 and then 18 to 19, they did only grow their earnings about 4%. But since that time, their earnings, quarter over quarter, have been growing very well. And so, I mean, that growth of 4%, those two fiscal years back to back of 4% was kind of low, but their 5 year average, including that time, was just under 11%, which is a pretty nice growth rate for an established company. And
Hmm.
on top of that, they've been getting hit a lot with the Chinese tariffs. They've been impacted largely by that. Um, but for this coming up fiscal year that's going to end in May, they're expected to grow a nice solid 21%. Now, that is a very nice number. I am a little nervous about them hitting that with the whole coronavirus situation. We don't necessarily know how that's going to impact production and sales in China, where they do get a lot of sales from. But I think uh, there are good signs of healthy growth as long as things like the coronavirus don't continue to happen all the time, which this isn't something that's going to happen every single year. At least I hope not. So I
Hmm.
think the growth you touched on, and the numbers that they've reported and that are estimated, um, they really back that up. Their revenue has continued to grow about 7% year over year from those two fiscal periods.
Hmm.
And their net margins are doing great. I mean, they're sitting at about 10%, so definitely room to grow there. But they increased those almost 100%. It was about 94% from their 2017-18 year to the 2018-19 year. So I'll definitely be interested to see if they could keep that kind of growth up. If they can get even that net profit margin up to like the 15% range for the last year, I think that would be great. They do sit
Hmm.
at a PE ratio about 34.4, a little bit high for you know a clothing company, but an athletic one at that. Um, so a little bit high, but I think it's pretty nice. And they do offer a 1% dividend, which is going to give you about 98. It gives you 98 cents right now. So I think it's a pretty solid stock. Something actually I do own a little bit of Nike, so I do personally like it. I think I got in about a week or two ago, just over $100. So I've definitely taken a hit as it's dropped to about $96.30 right now. Um,
Hmm.
but honestly, I think the stock's great, and I might look to continue to add to that position.
Hmm.
Um, but I mean, Nike, the, they have great numbers. They have great growth, and for the most part, a lot of the news coming out about them, with the exception of the things that they can't help prevent, has been pretty positive. Unlike something I can say for Under Armour, um,
Hmm.
who has been in the news, and I would say probably not for the best things. What do you have to say about Under Armour?
Yeah, so I mean, if you take a look at Under Armour's pricing chart, it's kind of a mess right now. They're pretty flat over the year, but back in July they had a high around $24.50. They had a low back in November down around $15. So I mean, since then the stock price has risen about 22%. Nice little jump there, but pretty volatile, very inconsistent right now. And I think the bigger picture, if you look at big picture, they have fallen nearly 40%. Their stock price has fallen 40% over the past 5 years. Why is this happening? Well, for one, they're struggling to keep up with Nike, and they're struggling to keep up with Adidas. They've had lower sales growth in North America, overseas, and online sales. So Nike and Adidas has been doing a better job in terms of growing or expanding their business in those three sectors. They also have two regulatory probes going on. Uh, so the SEC and the Department of Justice is investigating them in regards to inflating their revenue figures. So what happened was Under Armour or the SEC and Department of Justice are claiming that Under Armour dumped inventories intended for factory stores to like off price retailers in the final days of each quarter of 2016. So what this did was it likely boosted their revenue and reduced their inventories at the expense of gross margin. So, gross margin is your net sales minus the cost of goods sold, which is like prices to store stuff in inventory, prices to manufacture shoes or athletic wear, whatever it may be.
Mm-hmm.
And so that makes their gross margin look a little bit, makes it look a little bit higher than it actually should have been. So they were actually reporting earnings that were higher than they should have been. Um, so that's two things to keep. That's another thing to keep in mind. Not good, not looking good on the company. And the third thing is that there has been a ton of leadership change at the top. They've had three CFOs within the past since 2016, I think, or 2017. Within the past few years, they've had three different CFOs, and then their CEO just resigned earlier or towards the end of last year. So, ton of leadership change at the top. Not really certain, what's going to happen moving forward. But yeah, Under Armour just has been going through a lot of pain right now. They don't really look the most appealing to me. I like Under Armour stuff. I'm not trying to knock Under Armour. I'm just saying that their pricing in terms of, stock valuation does not look the most appealing right now. What are kind of your thoughts on that?
Yeah, I mean, I definitely agree. Looking at their past chart, like you said, they were in the $50 range at one point. I think they just hit that briefly, but regardless, I mean, to be in the 40s and 50s, and then, now they're sitting, high teens, low 20s constantly now, going back and forth. That the chart just looks like a mess.
Mm-hmm.
Um, you touched on the probe and their net profit margin, trying to kind of boost that. But I mean, looking at their financial years of 2017 and 2018, their net profit margin grew 8%. I mean, not great, but not awful. But for the
Mm-hmm.
2018 year, their net profit margin was only negative one, or it was negative 1%. Not even only
Mm-hmm.
negative 1%. That's not even something to be happy about, to have a negative profit margin.
Right.
Um, and so, I mean, clearly that number explains why, if they are found guilty of doing what they're accused of, why they're doing that, because that number is kind of horrendous.
Mm-hmm.
Um, but I mean, the revenue, that's growing. It was up 4% year over year. And their earnings per share from 2017 to 2018 grew pretty nicely, from 19 cents to 27 cents,
Mm-hmm.
which was a 42% increase. And for their 2019 year, which I believe they're supposed to report maybe like the second or third week here in February, um, people are expecting 34 cents per share, which it's not a 42% increase like the previous year to year growth, but it is 26%. That's pretty nice. Um, they're just really overvalued even at $20. I mean, their PE ratio is sitting at about 61 right now.
Mm-hmm.
They're about $20.18 at the time of recording. I I don't know. They have some numbers that show signs of possible growth in the future, but I think their core fundamentals. I mean, those profit margins. They really need to fix those before I would consider investing in Under Armour. And like you said, Under Armour's a good company in terms of the products they produce.
Mm-hmm.
I like their clothing, their shoes. It's pretty good in my opinion. Um, the product is there. I
Mm-hmm.
think. I think it's the management that really needs to get fixed. And like you touched on, um, those top, you know, those top positions, that turnover, that it's not helping. So
Exactly.
I think, you know, over time that this could be a pretty solid company. Their market cap is under 10 billion, so they definitely have room to expand and grow. And
Mm-hmm.
kind of looking into the athleisure wear sector, it is pretty small in terms of the amount of companies. So I think there's room for competition there.
Mm-hmm.
Um, I just think the management needs to get its ducks in a row before I would touch this stock personally.
I totally agree.
Now, a company that seems to have the management team really seems to be taking a lot of initiatives to grow, and that Under Armour should probably take some notes on is Lululemon. I think they've been doing great. I don't know, Steve. What do you know about Lululemon in terms of how they plan to continue to grow, and what they have in store for us for the future?
Yeah, so Lululemon has been on a tear this past year. I mean, they are up almost 100%. I mean, year to year, they're up about like 65%. But if you go back one more month, like the past 13 months, they're almost up 100% in terms of their stock price. And a big thing is because they are willing to try new things, diversify, and just expand their portfolio a little bit. They're now offering a loyalty program which offers access to sweat classes, and sweat classes are just like high intensity workout classes that are used to burn calories and build muscle. So it's just like a workout class. Um, they are also continuing. So like when you think of Lululemon, you probably think of women's products, right? Like yoga pants. Well, they are
Right.
actually trying to grow within the men's side now. So that's something they've been taking into account. Um, their digital sales, they've been working on their online presence, and they've been working on the international side of their business. So they've been opening new stores in Europe, opening new stores in Asia. Back to their online presence, this is something that helped drive their holiday sales. And I believe all three of these sectors, the men's side, digital side, and international sales, they all grew by at least 30% this past year, which is phenomenal. Um, and I think you've seen the price has reacted accordingly. So Lululemon, I mean, I think they're in terms of right now. I think they're a little pricey. I think if you want to get into them, you could. I think their men's department is still going to grow. I think their digital side and their international side is still going to grow. But you might want to look for a little bit of a pullback. They've been on a nice acceleration upwards. But yeah, Lululemon, great company. Um, what are your thoughts?
Yeah, no, I definitely agree, and their financials and their numbers definitely back that up. Like you said, I mean, I definitely do think they are a little overpriced, sitting at a
Hmm.
PE ratio of about 56 compared to Nike that's at a 34. Um,
Hmm.
so just going off that, I mean, they're definitely overpriced. But I mean, for the type of company they are, and I wouldn't say they're extremely overvalued, but I would like to see a nice pullback before I put any of my own money in them.
Hmm.
Um, Now, their financial year just ended in January, so year over year data, we just have 2017 and 2018 to go off of. But even 2017 to 2018, they grew their earnings per share by 48%. Now that's a crazy number.
Hmm.
I mean, Under Armour reported a similar percentage growth, but I mean, Lululemon's earnings per share was $2.59 up to $3.84, and they have higher, better revenue growth. They have better margins, so I think their earnings per share growth percentage kind of just stands out a little more to me. Now, their 5 year average is about 13%. So I don't think the 48% is something to realistically look forward to. But analysts are projecting for this current financial year that just ended about $4.89 per share, which would still be a 21% growth, which I think is just fantastic.
Hmm.
Um, Touching on the revenue from 2017 to 2018, they grew about 24%. So they're sitting at over $3 billion in revenue for the year of 2018. I definitely expect that to go up quite a bit for 2019. And their profit margin is sitting at 15%, which is the best out of the three stocks we've mentioned. And that grew 51% year over year. Not as much growth as Nike, but I think 51% growth is still really nice. And if they can continue to grow that, I think that's really good news for investors because that just means they're finding ways to cut costs and either keep their prices the same or increase them as much as allowed by the market. But I think with healthy growth in that profit margin number and revenue growth, I think this is going to be a nice stock to have. um, but before I would buy it, I would definitely wait for some sort of pullback.
Hmm. No, I would agree. Again.
Yeah. So I mean, kind of going off what we've discussed and said about these three companies, where do you sit at, in terms of investing in each one of them? I mean, if I were to give you a nice lump sum of cash right now, would you put it all in one? Would you kind of split it up between all three? Kind of, how would you handle a situation like that?
I would definitely wait right now. I mean, I really like Lululemon. Nothing against Nike. Nike's a very solid company, as we just talked about. But I would probably wait to put it into Lululemon. I would wait for a little bit of a pullback. That's just what I would do. Under Armour, they seem to have, again, good product, but they seem to have some issues that they need to take care of. But yeah, right now I would hold on and kind of see what happens with Lululemon. Likewise, what if I gave you a lump sum? What do you appeal to?
Yeah, I mean, like I said, I do have a stake in Nike right now, and I think if I was looking to add more at this moment, I would put a large portion of that money into Nike, and I think if the price was right and we saw a pullback in Lululemon, I would put a small stake in them as well. Um,
Hmm.
I You just can't argue with their numbers; they look phenomenal.
Yeah.
But I mean, Under Armour, like I said, I think they could be something I would invest in the future. But if I had money to put in them now, I mean, I wouldn't put it in. I would put it to the side and wait, but I don't want my cash sitting around that long. And I think it's going to be a couple of years before I can put any money into Under Armour without just doing it out of speculation to make a couple bucks,
Hmm.
trying to ride some momentum or something. So,
Hmm.
uh, I mean, just with my investing style, I think Nike is the way I would go. But if Lululemon presented a nice opportunity, I would definitely put some money there as well. All right, Steve. I think that about wraps up our group discussion on our athleisure wear stocks. Now I want to jump over to our education section. This week, just being our first episode, I think it'd be nice to start out on the ground level and just kind of discuss what a stock or share is. So, Steve, if I were to ask you, what is a stock, how would you explain that to me?
So, stocks came around back in like the 1500s when, uh, people in Europe were trying to set up voyages over to what is now North America. And what they would do is, there's a lot of value, a lot of wealth involved with that. So people wanted to get in on that, not just the shipping companies themselves. So people would invest stock into into like these voyages. And so what they would do is they would give money to raise capital for the voyages themselves. Jump, forward to today, what does stock actually do? Pretty much does the same thing. So stock is issued by a company to raise capital for growth. For example, the capital could be used for new projects within the company. They could just be used for, yeah, like for research. Um, and stock is also an ownership in that company. So that's why people back in the 1500s um, were investing into these voyages. They were part owners of that. So, if the company was able to profit off that, or if the voyage was successful, they would see a little bit of, they'd get a little bit of a piece of the pie for that. Do you have anything to add off that? Am I drastically off on that, or what else do you have to add?
No, I mean, I think that's a pretty good overview of what a stock is. Just basically, a company offers up some of its future profits for investors to step in and to generate some money.
Mm-hmm.
Um, So, if I'm looking to buy a stock, what am I doing? I'm just purchasing a share, right? A share of the company's stock, essentially.
Exactly. And so what a share is you might see people like you might hear like, oh, so and so purchased 500 shares of Apple or something along those lines. That just means that they purchased 500 shares of that stock, which means that they would own more percentage of the company than someone who purchased, like, let's say 100 shares of stock. So a share is a percentage of the company's stock, and that entitles you to be an owner of that company based on the percentage of shares that you own. So if the company does well, you're entitled to get a little bit of profit off of that. If the likewise, if the company does a little poorly, like kind of how some of the companies above, their earnings were down a little bit, you see some of that pain as well. You actually will lose some money. So yeah, a share is how you're able to own stock in that company. You're pretty much an owner of that company. Um, but people might say, "Oh, well, I own part of the company. Why can't I run the company?" How how does that happen? Who runs the company then?
Yeah, I mean that of course is going to be your CEO, your chief officers, and stuff like that. But those people are hired by the company, and they kind of have full reins of the company. But you know, us as shareholders, we have what is called the board of directors to kind of
Hmm.
protect us from management making bad decisions.
Hmm.
So, as you touched on, when you purchase shares, shares of a stock, you also get voting rights for that
Hmm.
company. And one of the things you vote on are, the board of directors, the people that kind of act on the shareholders' behalf to keep the CEO and other officers directing the company in line and making sure they're making decisions in the best interest of investors, not just trying to line their own pockets.
Hmm.
Um, and so that's kind of the safety net when you invest in a share. Now, I mean, there's not always guaranteed just because there's a board of directors that everything is going to be good and all companies are going to profit. Um, there's always going to be issues that arise that are unforeseen, but it does give you some sort of protection from the company doing things that aren't in your favor.
Right. They're looking out for the little guy in a way.
Yeah,
Hmm.
and I think that's a nice bird's eye view of what a stock is, what a share is, how they work. Are there any last things you would like to add, Steve?
Um, I think that's pretty solid. I don't want to be a dead horse, but yeah, I mean basically, a stock is something that a company offers that you can be part owner of that, which you purchase through a share, and as an owner, you have voting rights to kind of who runs the company, which is the board of directors. I think that pretty much sums it up pretty nicely.
Yeah, and I guess the last thing I might want to add is if you want to buy stock or share, you'll have to get with some kind of financial broker, whether that be a financial advisor, or you can open up your own account with something like Fidelity, Schwab, TD Ameritrade, Robinhood is a popular one.
Hmm.
So I mean, you'll have to open up some sort of brokerage account or go through an advisor in order to purchase stocks. Um, but yeah, I think that's a pretty good explanation. And yeah, if there's anything that you know our viewers would like to learn about or have questions about anything that we've discussed so far in this show, I think just leave a comment. We'd love to kind of discuss them and dive into what different evaluation metrics are and stuff like that.
Hmm.
But going from our education section, let's kind of take a look at what we did personally this previous week. Just go over any positions we might have opened up and any stocks that might be popping up on our radar that we might be looking at adding.
Mhm.
Steve, you wanna start off and tell us if you made any new acquisitions this week?
Yeah, so for me, pretty much every week is going to be relatively the same. I like to take the step of value investing, which we can discuss it in a later episode. But basically, I'm looking for value in a company when it's pretty much when I think it's a bargain to buy, and I'm going to hold on to that company for a while and just watch it grow. So I am holding Canada Goose and Alta. It's a bit of a rough week for Canada Goose with the coronavirus, but I'm holding on to those, and we'll hopefully within the next several months we'll start to see some growth. Stock that I'm adding to my watch list, I'm definitely adding Lululemon. I just think it's a great company, kind of like we discussed earlier. And my stock of the week, another one that I have an eyes on, is actually Target. They have been on fire the past year. They've grown, I think they've nearly grown 100%. They came out with earnings, or I think it was their holiday season sales were down a little bit, and they had a nice pullback off of their highs from about the $125 level to the $114 level. So I think that was a nice healthy pullback, kind of to get into if you're willing to invest in Target for the long term. But that's kind of what I've done and what I've been looking at this past week. How about yourself, Patrick?
Yeah, I mean, touch on your Target comments there. I believe it was probably like a week or two ago now, but when they did have that pullback, I did start a position in Target. So something I might look into adding down the line if they drop a little lower. I'm kind of continue to monitor them. But I mean, specifically in this past week, I closed a couple options positions in Microsoft, Snapchat, and Visa. And I opened a couple bullish option positions again in Microsoft and Snapchat. So kind of see how those work out and continue to monitor those. And then my stock of the week, as well as what I'm adding to my watch list, is Starbucks. I think their financials are great. I think that they're showing some great promise, good opportunity for growth. Um, yeah, I mean, I think it's just an overall great company. So, I mean, with the current pullback they're having, I might look at adding a position into them here in the near, you know, short term here.
Mm-hmm.
So I think that kind of brings us to the end of our first episode, Steve.
Mm-hmm.
Is there any last things you'd like to say before we go?
I just want to say I hope you guys enjoyed the episode, whether you were just listening or watching. One thing I really want to point out and drive home is that this is just our opinions on stocks. Really, you guys should be doing your own due diligence, but we're happy to kind of bring up our thoughts and our our opinions. So do your own due diligence, do your own research. Um, and yeah, just this is exciting. So I hope you guys have enjoyed it. Patrick, any last words?
Yeah, I mean, just I really hope you guys enjoyed it. Want to thank you guys for listening to our first episode, and we'd love for you guys' feedback. Let us know how we're doing, how we can make things better, and what kind of things do you want us to talk about. We have our group discussion section. If there's a group of stocks you'd love for us to discuss, I mean, me and Steve would love to dive into them. And as well as anything you guys want to learn about, we'd love to touch on that. So leave comments. We're definitely excited to engage with you guys and let us know what we can do better and what you guys want us to discuss. Um, you know, we want you guys to get just as much out of this as we do. So we're excited for that.
Hmm.
But I think that wraps us up, Steve. Hope you have a good rest of your weekend and good luck investing next week.
All right, and we'll see you next week.
All right, see ya.
See ya.